Well, good afternoon, everybody. Wanted to give a real quick update on our lovely Bitcoin, and I'm going to be looking at a different indicator. And what this is looking at is they call it the moving average ribbon bar, where what we have is we have 21 different moving averages ranging anywhere from a 5-day to a 200-day moving average. And what we can see this solid green line. This is our 200-day moving average. And then we've got this other uh, this line, which actually turns red as it crosses through other moving averages. This is our 5-day moving average. One of the things that are interesting about this one that I'll point out is we've got buy and sell indicators based on moving averages. A lot of people use these indicators to, put their positions in. And just a couple points to note is when we see some of these items, these moving averages fall underneath some of the other these duration moving averages, where we're seeing that the moving averages are turning red in color, meaning that they have collapsed on each other. And if you look down here at the ribbon bar down at the bottom, this is an indicator that goes in tandem with the moving average lines that are on the chart. We can see as these lines tend to collapse on each other, and when things start to turn really bad, you can see that more and more that the lines are crossing over each other. And when it gets to the point where they have completely collapsed, and where the short-term moving average actually crosses over or under the long-term moving average, we see basically bright red down here, basically saying that this has completely collapsed. And now what we are seeing is we're seeing all of these moving averages start to converge on each other. This also kind of goes into the duck face that we were looking at yesterday. We were seeing the head of the duck as a silhouette when we were looking at the other moving average, which I'll pull that up so that we can see it. Again, I'm going to be using my 8 EMA Crypto Enforcer special, where we've got our duck face using different day range moving averages, but nonetheless, we're seeing a similar pattern here. I only have, I think, 7 or 8 different moving averages on my chart, and the ribbon bar uses 21 on it. So you can find this if you do a search on the indicators for 200 MAR. You'll be able to see this as well. But something to note is when these all start to converge on each other and they all basically come together, and they all start to cross in a reverse pattern. It could be it could be some negative negative movement on the market. So something to note as we're looking at these, we saw that we had a rejection on our 200-day moving average in numerous cases. And actually, I think the actual point of rejection we looked last night. It was actually rejecting right at 210 days. And we are seeing this move down. This is definitely moving down from where it currently is. But the other piece to take a look at here, and I also pointed this out yesterday if you were watching, is we're seeing a rejection on the bears, and we're seeing so far today a rejection on the bears. And we saw that it went down all the way down to $8,300, exactly where I had predicted that it could go before we started to see a rise back to 9, maybe 10,000. 10,000 would take us all the way back up here. That would be pretty spectacular. What that would do, however, that would give our short-term moving average an opportunity to rise inside of this range. And if it does that, it gives it a more of an opportunity for all of these lines to sort of come together and sandwich themselves, which are going to put us into a squeeze where things might eventually decide if they're going to break out or if they're going to collapse. Personally, I think that it is going to collapse, and I think that the price is going to go down. I have some holdings that are in crypto. I have some that I had cashed out, a while back. and just sort of waiting to see what's going to happen. If it breaks out, that's great. I've got positions that I can cash out if we see a run, and if it collapses, I still have plenty just sitting out there waiting to make a position for it to collapse so that I can make a re-entry. But these are the things that we're looking at. We're looking at rejections as we're moving down, and then as we start to move up, start looking for these wicks in the opposite direction. Because if we see a candle like this one right here, where we've got a long wick up on top, I'm going to make this chart just a little bit bigger right here. This is a perfect example of what a rejection would look like on a resistance level. If you see that candle on a run, you're almost guaranteed that it's going to go down. It doesn't have to be a big wick like this. You see, we had another one over here when things started to go down as well. It's not always a true tell sign, but those are some indicators that you can look at if you are doing long-term trading strategies. You can take a look at those wicks, see what's going on to make a determination on whether or not it's going to continue to go up or if it's going to be rejected and move its way down. So these are referred to as the shooting star candles, where they've got a long wick up on top, which means bulls were trying to push the price up, but the bears were rejecting it. And again, it's going to then cause the price to go down, because even the bulls will see this, and the people that have huge positions are going to say, okay, well, they're not going to allow the price to go up anymore. I'm going to go ahead and sell also, which causes this massive sell-off. And so we see some natural market movement. It's been a bit sideways for a while. I know it's been very mundane for a while as we're moving sideways, and it can be irritating at times because everybody wants to make money, but this is what we're looking at on Bitcoin right now. Okay, well, that's all that I've really got for us today. I hope that at least some of this information on some of these charts and indicators have been helpful. Again, this is the moving average ribbon bar. So if you're going to do a search inside of TradingView, the 200 MAR, you can always use the indicator that I threw on there, the 8 EMA CES. You can take a look at that and use that as an indicator as well. Just depends on how busy you want the chart to look. I know with all of these moving averages, it can get a little busy, but definitely do your homework, take a look at these indicators. We're still looking at a cross on the RSI, and the money flow index is still kind of moving up, and it's about ready to hit the tip of the Bollinger Bands. And if that happens, usually that's a sell indicator as well. So there's a lot of different indicators, a lot of different ways to interpret them, and use them to determine proper strategies. So you'll have to find out what works best for you. But it's my job to kind of let you guys know different strategies that you can use. But again, this is your money, and invest it wisely. So I hope you guys have a good day.